everyone was panicking saying, oh my God, failed treasury auctions. This is a total lack of confidence in the US. I just disagree. I think that it's very legitimate for the markets to be questioning what it's going to take for the US to implement some fiscal discipline. Do we need to reprice yields in the long end higher to reflect greater spending over a long period of time? Most likely. Not to mention, looking to the 20-year auction as the canary in the coal mine, it ain't it, guys. For the basically entirety of my and Kristen, your lives, we didn't even have 20-year bonds. It's like, if you're a shoemaker, you're going to produce a lot of size 7s and a lot of size 9s and a lot of size 10s or 11s, right? So it would be like if Nike was like, we're going to make more size 10 and an eighth shoe, right? And then be surprised when all the size 10 and an eighth shoes don't fly off the shelves. There's not a ton of natural demand for the 20-year point on the curve. There's natural demand for the 30-year point and for the 10-year point. But the 20-year point on the curve has always been, for lack of a better term, kind of the redheaded stepchild of the long end. So structurally, it almost always has traded cheap to 10s and bonds, meaning both 10s and 30s typically have slightly lower yields, relatively speaking, than the 20-year point. The 20-year point needs to offer you a higher rate of return in order to entice you to come in to buy it. So to have the market need to back up and cheapen in order to take down a big 20-year refunding is a normal thing that happens in the course of doing business. For a 20-year auction to tail by then another 1.25 basis points, listen, it's not, oh my gosh, this auction was so great, but it's also not an unmitigated disaster. It's just like, well, okay, the 10.25 size shoes didn't fly off the shelves.